So goes January, so goes the year. So with French households continuing to spend less in December, but by a smaller margin than expected, is there room for any optimism in 2014? Joining me down the line to discuss is Holger Schmieding. Holger, you recently said France now stands out as the sick man of Europe because so many other countries have moved ahead. What's setting France apart from the likes of Spain, from Ireland, from Greece, etc.?
France has not yet embarked on serious economic reforms. Of course, France does not need reforms as badly as Greece did need reforms a few years ago. But France is the one country that sticks out in Europe as having some significant structural problems and low growth as a result, and not yet doing anything about that.
Faced with a sluggish economy that has barely grown in 2 years and unemployment at a 16-year high, Hollande has floated the possibility of lower taxes and cuts in public spending in his speech on December the 31st to the nation. But still, investors remain sceptical. Is this a credibility problem Hollande has from the gap between his discourse and his actions?
I'm not sure it's really a credibility problem. It's more that he is just trying a little turnaround, and we do not yet know how serious about that he is. Yes, most of the things he has done in office, especially initially, were not good for business and growth. He now is trying to change course, and I think it's kind of credible that he would like to change course. But whether he will do enough of the right things, that remains to be seen. And as a result, of course, businesses are yet pretty cautious.
France is counting on stronger consumer confidence and spending to pull the economy out of the stagnation that gripped it for much of 2013. The government has forecast growth of 0.9% this year, but officials have said that positive shock from more sweeping economic reforms could push that growth figure higher. This contradicts somewhat the latest PMI, which suggested France may have re-entered recession at the end of 2013. So where does your outlook lie?
Sweeping structural reforms can be a positive supply shock, yes, and they can and will lift economic growth over time. But first of all, France does not yet have sweeping supply-side reforms, and secondly, it always takes a while for the effect to show up. So to expect in France that this year already we would see a major benefit of whatever Hollande may now get implemented in coming months, that hope I think is a bit overdone. I'm afraid for this year the French economy will not expand by 1%, but by slightly less probably.
On a broader scale, European equities fell lower in morning trade on Friday as investor sentiment was curbed, with inflation data in the Eurozone missing expectations. The euro sterling was trading pretty flat off the back of the data. Are investors in wait-and-see mode ahead of next week's respective central bank meetings, do you think?
The Eurozone, at the moment, there is not much happening really to excite investors a lot. The key events are those in the US, indeed, and of course what's happening in emerging markets. After the very good run in equities that we had until the very beginning of this year, markets in a way are looking for excuses to sell off, and what we have seen in emerging markets, and some emerging markets as problems, has now provided a trigger for what I consider a correction. I think the underlying fundamentals for equity markets in Europe are fairly positive and will remain positive, but after such a good run as we've had until recently, a bit of correction on emerging market concerns is excusable.
Holger, great to chat to you. Thank you again so much for your time. Well, viewers, that's all from me for the time being, but tune back in on Monday when I'll bring you another exclusive interview looking at how the Brazilian real and Mexican peso are holding up amid the EM outflow contagion concerns. Have a great weekend.